Welcome back to the channel. Today we're going to be talking about income statements, specifically how to read them and how to understand them. But before we begin, like always, please subscribe, smash that like button, and with that being said, let's dive into it. Alright, so first we're going to be diving into Excel, and we're going to be showing the general structure of the income statement. And if you have any questions throughout the video or feel like I didn't go into as much depth as you would have liked into a certain area, please leave a comment and I'll address that as soon as I can. Generally, income statements are going to be divided into, you're going to have like a quarterly income statement, maybe you're doing a monthly, or maybe, it's an annual income statement, but in this case, we're going to do quarterly. So we have 4 quarters here, and here are the basic aspects of an income statement. And we're going to go through these one by one. But first here we have revenue. And revenue is essentially those sales or that money we're making from customers. So for example, this is revenue. Revenue can include selling a product or selling a service. But in this example, let's just say that we sell water bottles, for example. And these are just kind of made up numbers to make it easy. But let's say in these quarters, that's not a lot of money, but we're making $150, 275, 450, 600. So that's how much money we made off of selling water bottles. That doesn't include how much it costs to make them or anything like that. Just how much money customers gave us. And then we have our costs of goods sold, or our COGS. And those are essentially, since we're going off a product here, that can include how much it costs to make that product. So in this, I just assumed that took 50% of sales. So for every bottle we sell, 50% of that goes into making the bottle. And then we have our gross profit, which is essentially taking the revenue minus the cost of goods sold. And that is our gross profit on the product, which you can see here is 50%. All right, so then we get into our operating expenses, or commonly known as SG&A, or sales, general, and administrative. And those things can include things like salaries and wages, rent, and marketing expenses. So essentially, these are fixed costs that must be paid regardless of how many sales we have or how much product we sell. So I just made up some numbers here, but let's say, and I just kept it consistent throughout the same quarter, we're paying our employee or ourselves the same amount. Say we have a little space to rent, and we're spending about $100 a quarter or on market. So then you're going to want to total all of these expenses that you have here. So then you're going to take your gross profit and subtract it from your total expenses. And here, as you can see, we're down $150, down $88. We broke even quarter 3, and then we were up $75 the next quarter. So you can see we got some growth going here. And then generally what's going to follow in an income statement is you're going to have your interest expense and income tax expense. So for this example, let's say we don't have a loan or anything, so there's no interest expense for us. But to calculate that, what essentially you would do is you would take that interest rate and you would times it by your operating profit or your EBIT. Sorry, I didn't go over that yet, but EBIT is earnings before interest and taxes, which is the same as operating profit. But you're more commonly going to see EBIT in financial documents. And then you have your income tax. And we're going to say that is 30%, and you're just going to take your operating profit or your EBIT, subtracted your interest expense, and you're going to times it by that tax percentage. And that shows how much we're paying in taxes. So this negative number here is essentially like a tax return. And then finally, we get to our net profit or our net income, which is essentially just the operating profit minus the interest expense minus income tax expense. And that'll get us our net income, or that number that people base the company at. So this number is essentially how much money we're making after everything is paid off. So this is how much money we have left over to spend or to give back to employees or shareholders or whoever. All right, so this is the basic structure of an income statement, but you're never going to see, in real life, you're never going to see an income statement that looks like this. This is very dulled down, very basic, right? So let's go ahead and head over to Yahoo Finance. So you can look income statements, any publicly traded company in the United States has to file their income statement. So if we go to Yahoo Finance, we can search any company we want. So let's just look up Apple, and it's going to bring you to this page. You just go ahead and click on Financials, and it'll bring you to your income statement, balance sheet, and cash flow, and it's going to look like this. So in this case, this income statement is broken into annual. We used ours in the example before, we used quarterly, but in this example it's going to be annually. All right, and TTM just means trailing 12 months. So whatever the last 12 months were, regardless of the quarter or year or whatever, that's what's included here. So you can see here we start the same. So we have our total revenue here at $347 billion, since this is in thousands. And then we have our cost of revenue, or our cost of goods sold, at $204 billion. And you subtract those two to get $142 billion as our gross profit. So not too much different than what we were doing in the example. But then here we have our operating expenses. So here they have selling, general, and administrative. And like I mentioned, that can include, salaries and wages, that include rent, that can include marketing or advertising expenses. And then we have research and development, pretty self-explanatory. And we take all of that, subtract it from our gross profit to get our net operating income, or our EBIT. So then we have our interest expense and our income expense here in these two categories, which then is subtracted from our our operating income to then scroll down to get our normalized income, which is essentially the net profit or the net income of the company. And here we have our EBIT and our EBITDA. And EBITDA is earnings before interest, taxes, depreciation, and amortization. So you can kind of scroll through here and kind of look at different and how they break it down. But generally, that's the format income statements are going to follow. If anything wasn't explained to the depth you would have liked, please leave a comment. And before you go, please subscribe, smash that like button, and I would really appreciate that. Thank you, and have a great rest of your day.